So what's happening in the Singapore office market with rising rents and low vacancy rates, despite the emergence of hybrid work? Today, I have Gerald and De Yang from our commercial leasing team to share more about office leasing trends and the outlook for 2024. Hi, Gerald and De Yang.
Hello.
Thank you for joining us today. The Singapore office market has been somewhat of an outlier, right, given rising office rents and low vacancy rates. Can you share some of the insights that you're seeing in 2023?
Sure, Xin Yang. Thanks for having us. Well, to put things in context, office demand was not particularly strong given the heightened interest and rate environment, but this was somewhat offset by a tight supply situation with only one new completion in 2023. There were arguably a lot less relocation activities, with occupiers facing capex constraints and decision paralysis given uncertainties in this current environment. While as such, many occupiers actually decided to renew their leases, some just for 1 year, and many actually taking a wait and see approach. They want to see how things actually develop in the years to come. So this has kept building occupancies high, and as a result, landlords were able to raise their rents by a touch.
Yeah, I know we continue to see a flight to quality with occupiers seeking modern, sustainable offices for talent strategy and also their corporate branding. Most notably, demand for quality fitted-out offices is also evidenced by the take-up of shadow spaces. This has come down from their peak in end 2022, and we feel it's returning to the pre-COVID levels.
So in 2023, almost half of new office leasing activities in the CBD have been driven by the finance sector, while tech drove about a quarter of it. This is actually a really sharp reversal from prior years when tech was leading the pack. The demand from finance today is actually driven by wealth and asset management companies which are looking to tap into growing wealth in Asia Pacific. While overall tech demand remains cautious, pockets of demand have been observed from tech firms looking to grow their footprint in Singapore, given Singapore being such a strategic location for them.
Thank you, Gerald and De Yang. It's heartening to know that the flight to quality still continues to support the Singapore office market. Now, going into 2024, can you share some of the opportunities and challenges that you see next year?
Well, there could be a window of opportunity for tenants in 2024. There's a lot more supply coming online in both the CBD and decentralized markets. With more options in the market, occupiers with expiring leases in 2024 and 2025, I think should take this opportunity to negotiate their leases. This window of opportunity may be fleeting, as the market will return to a very tight supply situation post next year.
Pent-up demand for offices could be accumulating in view of high encouragement to return to the office. A growth in headcount while companies have largely kept their office footprint unchanged or even shrunk it. This has inevitably resulted in a much more crowded office, which no employees would really enjoy. So with more options in the market and potentially easing capex constraints as interest rate concerns recede, relocation and expansion activities could pick up in the second half of 2024.
Yeah, additionally, relocation demand to Singapore is expected to continue as companies look to hedge geopolitical tensions and continue to invest in Southeast Asia. Tech demand could surprise on the upside in 2024. There's a lot of positivity behind their earnings now, and there's also a rally in tech stock prices.
Well, it sounds like there's lots to look forward to in 2024. Thank you, Gerald and De Yang, for your insights.
Thanks, Ian. Thank you for having us. Thank you.